Right, let me ask you something. Have you tried selling a property recently? Or maybe you know someone who has? Because if you have, you'll know exactly what I'm about to tell you. The buyers have vanished. I mean, properly vanished. Like, where on earth have they all gone? Welcome back to the channel, everyone. If you're new here, we talk about the UK housing market in real time. We analyse what's actually happening, not what the mainstream media wants you to believe. And today we're tackling something that estate agents up and down the country are absolutely panicking about right now. Buyers have disappeared from the market. And I'm not being dramatic here. The numbers are genuinely quite shocking. So grab yourself a cuppa, settle in, and let's break down exactly what's going on, why it's happening, and most importantly, what this means for you whether you're buying, selling, or just watching from the sidelines. Alright, so let's start with the cold, hard facts. According to the latest data from property portals and estate agents across the UK, buyer inquiries have dropped significantly over the past few months. We're talking about a decline of somewhere between 20 to 35% depending on which region you're looking at. Now, to put this into perspective, this time last year, properties were still moving relatively quickly in many areas. Yes, the market had cooled from the absolute madness we saw during the pandemic years, but there were still buyers out there actively looking and making offers. Fast forward to now, and the picture is dramatically different. Estate agents are reporting that viewings have dried up. Open house events that would typically attract 10 to 15 potential buyers are now lucky to see 3 or 4 people walk through the door. Some properties are sitting on the market for months without a single serious inquiry. And here's what's really telling: the gap between asking prices and actual sold prices is widening considerably. Sellers are having to accept offers that are 10, 15, sometimes even 20% below their original asking price just to get a deal done. That's a massive shift from where we were not so long ago. So the big question is, why? Why have buyers suddenly stepped back from the market? Well, there isn't just one answer here. It's a combination of factors that have created what I like to call a perfect storm of buyer reluctance. First and foremost, let's talk about mortgage rates. This is the elephant in the room that nobody can ignore. Cast your mind back to 2021. People were fixing their mortgages at rates below 2%. Some lucky buyers even managed to lock in deals at around 1.5% or lower. Those were extraordinary times, and many of us didn't fully appreciate just how good we had it. Now look at where we are today. The average mortgage rate for a 2-year fixed deal is hovering around 5 to 6%, sometimes even higher, depending on your loan-to-value ratio and credit profile. For a 5-year fix, you're looking at similar numbers, perhaps slightly lower, but still vastly higher than what people had become accustomed to. Let me give you a real-world example of what this means. Say you're looking at a £300,000 property with a 20% deposit. That means you're borrowing £240,000. At a 2% interest rate, your monthly payment would be roughly around £1,000. At 5.5%, you're now looking at something closer to £1,400 per month. That's an extra £400 coming out of your pocket every single month. Over a year, that's nearly £5,000 extra. Over the typical 2-year fixed term, you're paying almost £10,000 more in interest alone. Is it any wonder buyers are thinking twice before committing? But it's not just about the mortgage rates themselves, it's about what those rates mean for affordability. And this is where things get really concerning. The cost of living crisis hasn't gone away, has it? Energy bills, whilst slightly better than the absolute peak we saw, are still substantially higher than they were a few years ago. Food prices have shot up, council tax has increased, insurance premiums have gone through the roof, everything costs more. So when potential buyers sit down and work out their monthly budget, many of them are coming to a stark realization. They simply cannot afford to buy the kind of property they want or need. The numbers just don't work anymore. First-time buyers are being hit particularly hard by this. These are people who don't have existing equity to play with. They're starting from scratch, trying to save for a deposit whilst paying ever-increasing rent. It's becoming an almost impossible task for many young people. And it's not just first-time buyers struggling. People looking to move up the ladder, perhaps families who need more space or couples wanting a bigger garden. They're finding that the step up to the next property level is now financially out of reach. So what do? They stay put. They don't buy, they don't sell, the whole chain grinds to a halt. Now, I want to be fair here because the picture isn't uniform across the entire country. Different regions are experiencing this buyer drought to varying degrees, and I think it's important we acknowledge that. London, as always, operates in its own little bubble. The capital has actually seen some of the most significant drops in buyer activity. Properties that would have sparked bidding wars just a couple of years ago are now sitting unloved on Rightmove for months on end. The premium that people were willing to pay for a London postcode has definitely shrunk. The South East is experiencing similar challenges. Areas like Surrey, Kent, and parts of Sussex that saw huge price growth during the pandemic are now facing reality checks. Buyers who moved out of London during the work-from-home revolution are no longer there in the same numbers, and local buyers simply cannot afford the inflated prices. Moving up to the Midlands, the situation is slightly more mixed. Some towns and cities are holding up relatively well, particularly those with good transport links and strong local employment. But even here, the volume of transactions has noticeably declined. The north of England presents an interesting picture. Places like Manchester, Leeds, and parts of Yorkshire had been performing quite strongly. There was genuine demand from both owner-occupiers and investors. However, even these markets are now showing signs of cooling. Buyer numbers are dropping, though perhaps not as dramatically as in the south. Scotland has its own dynamics with different property laws and a slightly different market structure. But even north of the border, estate agents are reporting fewer registered buyers and longer selling times. Wales and Northern Ireland are telling similar stories. Market activity has slowed, buyer confidence has dropped, and sellers are having to adjust their expectations significantly. Here's something that I think is really important to understand. Once buyers start stepping back from the market, it creates a self-reinforcing cycle. Let me explain what I mean by that. When people see buyer activity dropping and prices starting to soften, what's their natural reaction? They think, well, if prices are falling now, maybe they'll fall further. Why would I buy today if I could get the same property cheaper in 6 months' time? This is what economists call a buyer's strike, and it's incredibly powerful. Once this mentality takes hold, it's very difficult to shift. People convince themselves that waiting is the smart move, and in some cases they might be right. There's a phrase in property that goes something like this: your first offer is often your best offer. In the current market, that wisdom is proving truer than ever. If you receive a reasonable offer, even if it's below what you hoped for, it might be worth serious consideration. Of course, not everyone has the luxury of waiting for better market conditions. Some people need to sell due to divorce, job relocation, financial difficulties, or other life circumstances. For these sellers, the situation is particularly stressful. Now let's flip the script for a moment and look at this from a buyer's perspective. Because whilst I've painted a rather gloomy picture so far, there is another way to view this situation. If you are a buyer who is in a strong position, perhaps with a large deposit, stable employment, and a mortgage agreement in principle, this market could actually work in your favour. Think about it. Sellers are desperate. Competition from other buyers is minimal. You have negotiating power that simply didn't exist 2 or 3 years ago. Properties that would have received multiple offers are now going to single buyers who can largely dictate terms. I've heard of buyers successfully negotiating 10 to 15% off asking prices and having sellers throw in furniture, cover moving costs, or agree to other sweeteners just to get the deal done. For investors too, there may be opportunities here. Whilst rental yields have been compressed in recent years and landlord regulations have tightened, buying at a discount in a falling market could prove to be a smart long-term play. The caveat, of course, is that you need to be confident the property won't fall significantly further in value, and that's something nobody can predict with certainty. Let me spend a moment talking about what's happening in the mortgage market, because this is crucial to understanding when buyers might return. The Bank of England's decisions on interest rates are being watched incredibly closely by everyone in the property industry. There's hope, perhaps cautious optimism, that we might see rate cuts coming through in the coming months. If that happens, mortgage rates should follow. Already, we're seeing some lenders starting to edge their rates down slightly. Competition among mortgage providers is intensifying, which is good news for borrowers. The infamous mortgage mini-crisis we saw after certain political events seems to have stabilised, and lenders are more willing to offer competitive products. If mortgage rates were to drop back towards 4% or below, I think we'd see a significant uptick in buyer activity. Not back to the frenzy of the pandemic years, but certainly a notable improvement from where we are now. The million-pound question, of course, is when this might happen and by how much rates will actually fall. Nobody knows for certain, and I'd be suspicious of anyone claiming they do. Right, so let's gaze into the crystal ball for a moment and consider where this market might be heading over the next 6 to 12 months. My personal view, and remember this is just my opinion based on the data and trends I'm seeing, is that we're likely to see continued softness in prices for at least the next 2 quarters. The lack of buyer demand is going to force more sellers to reduce their asking prices, and actual transaction prices will reflect that. However, I don't anticipate a dramatic crash. The fundamentals of the UK housing market, such as chronic undersupply of new homes and strong underlying demand for housing, provide a floor of sorts. We're unlikely to see the 30 to 40% price drops that some doommongers are predicting. What I think is more likely is a gradual adjustment. A rebalancing of sorts where prices come down to levels that are more sustainable given current income levels and borrowing costs. This might mean a cumulative drop of somewhere between 10 and 15% from peak prices, depending on the region. The wild card in all of this is the broader economy. If unemployment rises significantly, or if we enter a deep recession, all bets are off. Forced sellers flooding the market could trigger a more serious price decline. So let's wrap this up with some practical advice depending on your situation. If you're thinking of selling, get your pricing right from day one. Speak to multiple estate agents and listen to what they're actually telling you, not what you want to hear. Be prepared to negotiate and consider what flexibility you can offer buyers. If you're a buyer sitting on the fence, ask yourself honestly whether you're waiting for the right financial conditions or whether you're simply procrastinating. If you find a property you love at a price that works for your budget, that might be the right move regardless of whether prices fall another 5% next year. If you're currently locked into a fixed-rate mortgage that's due to expire soon, start planning now. Speak to a mortgage broker early and understand your options. Don't leave it until the last minute. And if you're simply watching the market with interest, keep educating yourself. Subscribe to this channel, obviously. Follow the data, understand the trends, because knowledge is power, especially in a market as complex as property. The buyers will return eventually. They always do. The UK's fundamental desire for home ownership isn't going anywhere. But the market needs to find a new equilibrium first, and that process can be painful for those caught in the middle of it. Thank you so much for watching today. If you found this analysis helpful, please give the video a like. It really does help with the algorithm and allows more people to find this content. Subscribe if you haven't already, and hit that notification bell so you don't miss our regular market updates. Drop a comment below and let me know what you're seeing in your local area. Are buyers vanishing where you live too, or is your market holding up better than average? I'd love to hear your experiences. Until next time, stay informed, stay patient, and I'll see you in the next video. Cheers.